All right. Excellent. So for those of you that are kind of new to these sessions, what we do here is utilize the same strategy we've been going for, wow, it's been quite a few years with FX Street, maybe 4 or 5, maybe even 6 years, maybe even more actually. Anyway, same strategy. Nothing's changed from day one. It's quantifying the market's supply and demand, quantifying supply and demand in any and all markets, stocks, futures, Forex, you name it. What we're attempting to do is identify where banks and institutions are buying and selling in the market so we can buy and sell there too. The key to making this work comes down to the ability to identify fresh supply and demand zones and large profit zones. That's what we're looking for. There are many turning points on a chart. All of them are because of supply and demand, obviously, but we're not looking for any of them. We're looking for the ones that have the highest, where the highest probability of prices turning, and nice big profit zones. So if you have any questions as we go along, just ask in the chat, and we'll go from there. We'll just go market to market and apply strategy. Okay. Let's start with the dollar, a very key market for us. And let's go down to first let's go to the daily chart. That's the chart these lines going back many years are actually from FX Street sessions, believe it or not, if you guys remember some of these. But so here's the level we went into, 103.40. Okay, we've got multiple levels above. So we've turned from that area. Now we've fallen off a little bit. So now let's go down to a smaller time frame and see, where we're at and where prices are likely to go. So when I come down to the 15-minute chart here, it doesn't give us a whole lot of information. But when I come down to, let's go to the 10-minute chart, you'll see the dollar does have room. Yeah, it's into the area where it fell from before, and it could fall from here now. But most likely, it's much more likely to fall from this 101.15 area of supply up here, not all this stuff. Okay, could, but the chart is telling us there's quite a few more orders up here at 101.15. So dollar going up and falling. Also, if we come down to a really small time frame, what you're going to see is you're going to see we have a little area of demand below. See that? Okay, so notice this little area of demand right here. And then let's go to the Aussie dollar, or we're on the Aussie dollar. And notice in the Aussie dollar, we have a couple supply zones above. All right. So what we want to do is line up these, these supply zones, or one of these supply zones, with that dollar demand zone. Okay, that helps stack the odds in our favor. When we look below current price in the Aussie dollar, you can see all this stuff that I'm, pointing to here, all these pivot lows. So below current price in the Aussie, we're looking at the futures. You can do the same thing in the spot. Below current price, we have all these pivot lows, which represent the picture of filled orders, orders being filled. In other words, demand is buy orders, right? Demand is competition to buy. So a lack of demand would be a lack of that competition to buy, right? Or the opposite picture. That's what we have below current price. All these pivot lows, does everybody understand how, all these pivot lows represent price coming down and filling buy orders. So there's room below in the Aussie dollar. The picture above is the opposite. It's the picture of unfilled sell orders. So when the Aussie dollar, if and when the Aussie dollar gets back up to this first supply zone, we also want to check the dollar, make sure it's down at or close to that the demand zone and take the trade if the risk reward meets the criteria you're looking for. Make sense? Okay. And let me also say, I have a whole list of markets here for us to look at. But if you have any markets that you really want to take a look at, just let me know, and we can, we can take a look at them. All right. Let's go to the S&P. Anybody here trade the S&P or any of the equity index markets? No S&P traders here? Or any other markets you want to take a look at? Anyway, if you do, or maybe just not able to type, we do have some supply coming up in the S&P, 2356.50. Okay. And the nice thing about the supply zones coming up are when we go to the larger time frames, we see that we don't have a whole lot of demand below. Okay? I mean, we do, but it's much lower. So for the first time in a few days, the equity index futures are offering us, some nice turning points to the downside, supply zones, demand zones that are far apart from each other. Okay? Now you have to make sure that you understand the rules around the strategy. There's not many, and they're very simple, but you have to make sure you get the rules. Okay, it's all about fresh levels. When you say fresh levels, we mean quality levels, which means that they have the odds enhancers we're looking for. Okay. And of course, same thing on the demand side. So again, if you have any markets you want to look at, just type them into the chat, and we can go take a look at them. Or if you have trading opportunities you're thinking about and you wanted me to go over them, we can do that too. Just type them into the chat. Otherwise, I'll just continue to go through my markets. Okay. Let's go over to, not gold, we wanted to go to right here. So another market that's pretty important is the bond market. And, this is, again, for those that are just trading currency markets, if you get the strategy down and understand supply and demand and you apply to FX, you should do pretty well. If you want to stack the odds in your favor even more, start to apply the same strategy in other markets that impact the FX markets, right? Like bonds and things like that. Right? Remember, money is always chasing higher rates of return. So we look at interest rates, and we see the 10-year note. If you look at the daily chart below, it's in between two pretty big and very, very quality supply and demand zones. One's a drop-base rally supply, and the other one is a drop-base drop. But when you look down to some of the smaller time frames, you'll see that you have some demand below. So the likelihood is, what the chart is telling us is that prices in the 10-year note are going to continue to go higher, which means lower interest rates. Okay? All right. Let's go to the yen. And we'll take a look at some. Let's look at the yen through the spot market. Okay. The yen is a very interesting market because it has. Let's go right down to the 60-minute. Has some quality levels that we want to take a look at. Now the yen can certainly turn here, and that would mean the dollar is going to have to move higher. So let's just move this chart over here. Okay. And like we said, there is room for the dollar to move higher. So, but the level that we're really interested in here, that I was kind of getting to, is this one. There's that supply zone, and that one right there. So I know we have a little ways to go, but remember, we're only looking at a 15-minute chart, so prices can be up here pretty quickly. For prices to get to the supply zone that I've put on the chart, you're going to have to get through all this stuff here, which is not going to be easy to do. So what that does is, remember, to get to the supply zone I put up here, it's going to take a lot of buying to get there. So a lot of buying to get there means you're going to likely hit this supply zone with fewer buyers on board, increasing the likelihood that price is going to turn lower. Okay. So you're looking at 112.69 with a stop at 112.76. Okay, and then a profit zone. We look for prices to come all the way back down here unless there's a new demand zone that develops. Okay, so it looks like we're kind of getting a new demand zone. If you come down to the, well, let me just do it right here. Right, if we come down to the smaller time frames here, all right. But even so, if this ends up being a demand zone, you still have a profit zone of at least 3 to 1. Yeah, so that's what I'm saying, Jake. You'll even with this one, you'll still have a profit zone of at least 3 to 1. Okay. It does matter how price gets to the level, but remember, how price leaves a level tells you how price is going to come back to the level. So as some of you are alluding to, these two areas right here are likely to produce demand zones on the upside. When they're not there, when price just really falls hard from this area, it's usually going to come right back and then usually fall again. But when you have these, yeah, you're usually going to have a demand level that develops. Remember, every level on a chart is there because of another level's existence. It's just a numbers game. But even with this new demand zone that's developing here, you still have a nice big profit zone of 3, almost 4 to 1. So keep an eye on that one. Okay, and again, I can go to any market you like. Otherwise, I will. Otherwise, I'll just keep going through my list. So you can see, so now we're looking at FGBL. So this is basically, the big bond markets in Europe, Germany, and you can see there's such a difference in where this market is compared to a market like the 10-year note in the States. Dramatically different, right? If you look at this weekly chart of, German bonds compared to, there's the chart of U.S., very, very different picture, right? Okay. Let's keep going. Sure, we can look at that market. Let's take a look. Here we've got the New Zealand dollar against the yen. So let me just put this chart back to a 60. Just wait for that chart to show up. Okay, not sure why it's not. But anyway, when we look at the larger time frames, we really need this chart here. We can start with the 4-hour. And then we will work our way down. Okay, let's move this over here a little. There we go. So there's two key levels to focus on. All right. We have this very attractive rally-based drop. That's our key level there. And then we have the only other picture of supply is sitting right up here. Drop-based drop. And there's that. Now remember too, the only reason, yeah, I see your question up there, Carlos. Yeah, just a sec. The only reason why I'm putting in these supply levels is because there's a lack of demand below this. All these pivot lows here are the picture of orders being filled. Okay, so we'd expect prices to move down through that area. And at this point, you really have a profit zone that takes you down to, I'll put a blue line in, right down here, which is just before this demand. Okay? So if and when prices get up to either of these levels, this first one's okay, there's room for prices to come down to here in this market. That's just before the opposing fresh demand zone. Remember, all prices do in all these markets is just move from supply to demand to back again, right? Until once orders are gone at a level, prices just move to the next set of levels. I see the question there about trading Forex. Yeah, I definitely trade Forex, but I just do it through the futures market. Okay, it's just if you're short-term trading the Forex market, it's much more ideal to do it through the futures, in my opinion. You don't have the spread that the brokers make it for. It's just you're trading through a central exchange, a order matching system. There's not a lot of brokers. You're talking about spot brokers, I imagine is what you're talking about. Yeah, a couple big ones left in the U.S. and then you have interactive brokers too, which would be a third. So how they do things a little bit different, but it does work well. Good platform. Actually, not IB anymore. That's right. So yeah, so you're left with two. Our partner is Oanda, so we've really looked into them and how they do things, and they appear to be a pretty quality broker. And you have some others, overseas. So, but yeah, if it's basically either one of those two, or ideally Oanda, or you consider moving to the futures, right? Okay. Remember, the futures market, a lot of people think it's just for day trading. It's completely not. Futures are great for day trading. It's clearly the best market for day trading, but for holding on to longer term positions, the futures are outstanding. So I've lived in the world of futures for over 20 years now. Anyway, let's keep going. Any other markets you want to look at? Type them in the chat. Otherwise, I will, again, continue to run through the list here. Why don't we take a look at oil? And I have no problem going back to Forex markets if you like. Okay. So here is let's go with the larger time frame. Blow this chart up, and I'll be quick because we've got another level here. So this area is key. Again, big room below, and about 54.30 on the supply zone. But when we come down to the smaller time frames, this is what I really wanted to get to, and I'm going to bring it down to maybe a 15-minute chart. You're actually at the entry point right now. So the plan here, I set this one up a little while ago, is to short it right here at this black line, and with a target sitting right down here. You have like 2 or 3 supply zones on top of each other here. The black line up here is the stop. So you're talking 54 to 54.40, about 40 cents of risk for about twice that on the profit side. If you want a short-term trade oil. Right? Or we've got this bigger level sitting, just above. Okay? Other than that, not a whole lot else to talk about with oil. You can look over here at the dollar. You see it is, as we expected, went through these 2 pivot highs. Again, those are not pictures that stop prices from moving. We're looking at a smaller time frame. There's a level up here that's more likely to stop that rally. Okay. Let's go back to spot Forex. Seems like that's what more people are trading here than anything else. We can take a look at the euro. Okay. So with the dollar rally, we see obviously the euro's falling, but let's go match up those levels again. Here's that little level we started with. Obviously, euro's falling as we expected it to, so it's going in the wrong direction, not towards our entry price. But, whoop. Yeah, again, when you go down and look left, and we're already down to a 2-minute chart, there's really nothing in here that's going to cause a significant sustainable turn in price. And if it does, it's only going to take price up to supply zones where we would expect a decline again. Does that make sense? Okay. Yeah, we can take a look at when you say silver, which symbol are you thinking of there? A lot of different ways, many different ways to look at silver, many different ways to look at all these markets. And then we'll also take a look at gold. You can certainly type in the chat, whatever, or I can just pull up futures. There's a silver futures, if that's the one you're talking about. On gold, you got the same level here in the futures, in silver, I mean. Nice little supply zone sitting just above. Okay, right up in here. Okay, there's that. Let me get this chart on the 60. Well, anyway, remember, make sure you folks understand the price points. And some of these markets are very, very big price points. Not all. So, little supply zone up here that you can possibly day trade against that level. Looks like it's offering about, a fairly attainable 2-to-1. Okay. In the bigger picture, this is where that 2-to-1 comes from is you're probably going to run into some demand right here about 18,250. Okay, right up in here. So that's really all there is to consider at the moment in silver. Now, once silver gets above 19,000, we have some really nice supply sitting up there, but we're not anywhere close to that now, so probably no point in going over too much of that. Okay. All right, let's take a look at, let's keep going here. Here's the S&P. Getting right up close to that level. So you have the same levels in the NASDAQ, a little bit higher actually. We probably want to wait for that. Let's go to, again, any other markets you want to look at, I can pop them up. Otherwise, I'll get back to my little list here. We talked about the yen before. The yen is very likely with so again, we looked at this market earlier in the spot market. And yes, we have a really nice demand zone sitting below. We're on a 4-hour chart, so you're not really close to that yet. While we would expect prices to go up here, meaning dollar lower from up at this level, remember these areas are magnets for price. So watch the yen up here. Notice on the 5-minute chart we have a nice little demand zone. So while this 4-hour level, which is really all this is a magnet for price, this may be the level that we could trade off of to when price turns lower. Okay, let's do that. All right. Now you don't want your stop just well. Let's go to a small time frame here. Let's see where we have a stop here. So I would want to move this down. 6. So you're probably looking at a stop at around 89.12. Okay. That would be right up here. We'll put in a red line for that. And, again, if this is a good level, it's going to turn just a little before the meat of this level. Okay. And we'd look for a profit target. Boy, this has room. Oh, sorry. Here's that level. Yeah, so a little day trading profit target of, I think we're looking right over here. So I'm going just above this demand zone on the larger time frame. Okay? There we go. It's low risk. Let's look at the same area in the spot. And you should be able to see it pretty clearly. Whoops, wrong market. There we go. Okay, yeah, so same thing there in the spot. Looks okay. All of this is coming off of this very quality 4-hour level right here. But again, the only challenge with the euro is you've got some demand below, some supply just above. Price is kind of wedged in between these two. So that'll all work itself out. Just need to get those orders filled, and that's pretty much what's happening. Right? All right, let's keep going. Okay. Oh, yeah, let's go back to our Aussie dollar. Yeah, it's not moving enough. It's not there yet. Okay. Here's our yen. Start to go back and look at some of these. All right, so got a quick little. Looks like it went about one tick into the level and started to turn. Remember, the yen pays $12.50 a tick for those of you that just trade the spot forex. When you trade through the futures, you're making $12.50 a tick. Doesn't sound like a lot, but this market can really move. So you start to do more than one contract, and you get some moves. The numbers add up pretty quick. Here's the dollar on some multiple time frames. You can see on the 4-hour for the dollar, we have some pretty quality supply sitting up here. Oops, let me just fix this. Okay, it's higher though. Probably not a big threat of price getting up there today. Small time frame, we're coming into a little bit of demand here. So let's see if this demand holds. You should see the yen fall pretty good. Yeah, exactly, Jake. Exactly. That's I completely agree. Yeah, when you're looking at significant turns, really on any time frame, you're looking at rally-based drop and drop-based rally. The rally-based rallies and drop-based drops, yeah, when you're in the middle of a move, those are fine. But yeah, for the catching the big turns, those are not what you want to be looking for. All part of the strategy, and it sounds like you're getting it. Okay. I just want to make sure we have these lines in, because this is a level that we definitely want to pay attention to. Yeah, that looks good. But there's room above, like we said. And again, maybe this is the level that kicks price up there. No, what we're saying is the major fresh levels. Remember, those rally-based drops and drop-based rallies are those are the ones that are always out at the extremes. Okay, I think what I said. I think what you're suggesting there. What I meant by whatever I said in that previous webinar was you got to be careful with the rally-based rally and drop-based drop because they're found in the middle of moves, and so they're not going to have the great. Those are always going to be a little bit closer to equilibrium, where the others that are fresh are way out there on the curve. And yeah, when you combine the both, that's the ideal level. So, but there are all four levels. I'd almost say you'd want to look at them not equally, but because they're different. But if you think of the dollar supply, that 103.40 that we talked about so much, that was a drop-based drop. You know what I mean? But it was a fresh level from a long time ago with a massive profit zone. So I guess what I'm getting at is it all comes down to the odds enhancers. You could have a rally-based rally that's better than a drop-based rally if the odds enhancer score is higher, and vice versa. So when you apply your odds enhancer scoring system, you're really just looking for those 4 patterns and taking the one with the highest score. And that's really it. Okay. So there's the yen just sitting there. Let's see. I thought we had a little supply zone or demands. Oh, we have demand here, and we need to come back to it. Got it. Natural gas was another one that we were looking at before. Or I was looking at before. Let me take you to the chart. That's the wrong natural gas. Let me take you to the other one. So for those that trade oil, natural gas, watch those markets. This is a chart we've been looking at, every FX Street session for quite a long time now. And we just came down to this demand zone again for the 3rd time. We're bouncing higher. Just be careful if you're thinking of buying natural gas anywhere up here, because we do have some supply that's coming in just a touch higher, right? You get up to about 29.20, and the market's going to hit some pretty good supply. So be careful with that. What we'd be looking for is a move down, possibly a short trade off that level, but down to this demand zone below. Okay. All right. All right. There's my email address. If you have any questions regarding strategy, there are previous webinars you can watch. Some of them are very educational. Others for just finding trading opportunities. So Seiden at tradingacademy.com. We found quite a few opportunities today. Some are not at risk of meeting entry today, but watch them next week. If you're in our Japanese yen trade, you've got your stop, you've got your target. I would just leave it alone and let it play out. If you're in it, that means you're okay with the risk and you're okay with the reward, so you leave it alone. On that note, have a great weekend, everyone, and we'll see you next time.